Good evening to everybody who has joined in. On behalf of SBI Cap Securities, I would like to thank the management of Jet Airways for giving us an opportunity to host this call. Today with us to discuss the Q3FY18 results of Jet Airways, we have the management represented by Mr. Vinay Dubey, CEO, Mr. Amit Agarwal, CFO and Deputy CEO, Mr. Gaurang Shetty, Director and Senior VP Commercial, Mr. Raj Sivakumar, Senior VP Network and Revenue Management, and Mr. N. Ravichandran, VP Finance. We will start with opening remarks from the management, followed by a Q&A session. With that, now I hand over the call to the management. Over to you, sir.
Thank you, Santosh. A very good afternoon to all. My name is Ravichandran. Before we begin today's call, wish to state that certain statements made during this call related to our future business, financial performance, and future events or developments may be construed as forward-looking statements, which involve a number of risks and uncertainties that could cause actual results to differ materially from those in such forward-looking statements. Wish to inform you all, the numbers reported this quarter are in compliance with the provisions of Ind AS, both for the current period as well as for the previous periods. The major impact of these would be explained shortly over the call. Let me hand over the call to our CEO, Mr. Vinay Dubey.
Thanks, Ravi. Good afternoon, everyone. I am pleased to extend a very warm welcome to all of you for this earnings call organized by SBI Cap. I am very grateful to all of you for your time and interest that you have shown in our company. It's a pleasure to be here with my team. I know they've been introduced once already, but let me take the pleasure of introducing them again. I'm here with Gaurang Shetty, Whole-Time Director, Amit Agarwal, Deputy CEO and CFO, Raj Sivakumar, Senior Vice President of Network, Pricing and Revenue Management, and N. Ravichandran, Vice President of Finance. Let's start with the results for the third quarter of fiscal year 18. So during the third quarter, our available seat kilometers or ASKs increased by 8.7% over the same period to 1.5 billion ASKs. And this is mainly due to two reasons. The first was a full period impact of the 777 aircraft that came back to us only in December of 16. So as we compared ourselves to the same quarter, we had a full quarter of them versus a partial quarter the previous year. In addition, we added 5 737 aircraft. These were net new when you compare them quarter by quarter, and we added them between May of 2017 and December of 2017. So these were two of the reasons why we had an 8.7% ASK growth. We recorded strong traffic growth as well in the quarter, with the number of passengers carried increasing by 13.4%. And this took us to a total of 7.7 million over the same period last year. This is our 11th consecutive profitable quarter with a net profit of 186 crores at a consolidated level. For the 9 months ending December 2017, we've reported a profit of 350 crores. The total RASK or revenue per kilometer, measure of unit revenue, was at 4 rupees 28 paise compared to 4 rupees 22 paise in the same period last year, and that's an increase of 1.4%. Brent increased by 21% in the quarter to US $58.50 per barrel compared to US $48.50 per barrel in the same period last year. This resulted in an overall unit cost or CASK increase to 4 rupees and 33 paise for the third quarter fiscal year 18 as compared to 4 rupees and 22 paise for the third quarter fiscal year 17. I'm happy to inform you all though that our CASK excluding fuel fell by 2.6% to 3 rupees and 2 paise against 3 rupees and 10 paise in the third quarter of fiscal year 17. Now, this clearly reflects our efforts to reduce non-fuel CASK, and we've been talking to you about this for a little while now, and we've mentioned in the last call and some of the investor calls that we have that we have a target to reduce this between 12 and 15% over the course of the next 18 to 24 months on a run rate basis. We participated in the second round of bidding of the RCS Udan scheme launched by the Government of India, and we have been awarded certain routes, and let me tell you what those are very quickly. We were awarded Delhi to Nasik. We were awarded Lucknow to Patna. The Delhi-Nasik we'll fly on a 737. Lucknow, Allahabad, Patna we'll fly on an ATR. Nagpur, Allahabad, Indore we'll fly on ATRs, and Lucknow, Bareilly, Delhi we will fly on ATR. Our loyalty program, Jet Privilege, as you know, it's the largest loyalty program of its kind in India. We're very happy to report in this quarter that Jet Privileges won 9 awards in various categories at the Customer Loyalty Award and Customer Experience Awards. These awards were part of the Customer Fest Show 2018. And just to give you a highlight of some of the awards won by Jet Privileges, the awards include: one is the best use of contests/promotions in a loyalty program, the best use of data analytics in predictive modeling, and the best customer experience awards of the year in banking. So we're very proud of our program, and we're very happy that they won these awards. Congratulations to that team. Talking about customer experience, though, in the quarter, our on-time performance was at a level that did not make us proud. We have recognized this, and we have put a series of actions together that will and have been executed. More actions to come later on in the quarter, and you all should have seen a noticeable increase in our on-time performance from the third quarter to January and February of this year. And this is something that will remain an ongoing focus of ours moving forward to make sure that we get back to the top of the on-time table like we once were. With this, let me now turn it over to Amit to take you through the financial and operating results.
Thanks, Vinay. Good afternoon, everyone. As we have mentioned to you all in the last quarter, Jet Airways has adopted Indian Accounting Standard, commonly known as Ind AS, effective 1st of April 2016 as a Phase 2 company. Accordingly, the financial results for the quarter and 9 months ending 31st December 2017 have been prepared in accordance with the recognition and measurement principles laid down under Section 133 of the Companies Act 2013, read with the relevant rules issued thereunder and other accounting principles generally accepted in India. The results for the comparative quarter and 9 months ended 31st December 2017 have been restated as per Ind AS, and the reconciliation of the results between previously referred as Indian GAAP and Ind AS for the quarter ended 30th December 2016 have been provided in Regulation 33 submitted to the stock exchanges and also available on our website. We reported an earnings before tax for third quarter fiscal 18 of 186 crores as against 299 crores for third quarter fiscal 17, which included a profit of 327 crores on account of sale and lease back of aircrafts. Profit for the 9-month period ended December 17 was 315 crores as compared to 863 crores, which again included a profit of 518 crores on account of sale and lease back of aircraft for the same period last year. Now let me give you specific details for the Jet Group consolidated performance for the third fiscal quarter 18 vis-a-vis third fiscal quarter fiscal 17. In third quarter fiscal 18, the total capacity, domestic and international, put together in terms of seats grew by 6.8%, and the total passengers carried by the airline grew by 13.4% versus third quarter fiscal 17. In domestic market, we carried 5.5 million passengers in third quarter fiscal 18, an increase of 16.7% over same period last year. In the international market, the airline flew 2.17 million passengers, a growth of close to 6% over same period last year. ASKMs during the quarter went up by 8.7% compared to last year. We have achieved overall seat factor of 84%. This was a marked improvement of 4.4 points as compared to a seat factor of 79.6% in third quarter fiscal 17. The improvement in number of passengers carried has resulted in an increase of our consolidated gross revenue by 10.2% to 6,400 crores in the current quarter from 5,817 crores in the same quarter last year. The RASK increased by 1.4% from 4.22 in third quarter fiscal 17 to 4.28 in the current quarter. Total cost per ASK increased by 11 paisa to 4.33 in the current quarter vis-a-vis 4.22 in third quarter fiscal 17. This was mainly due to the fuel cost increasing by 19 paisa from 1.12 to 1.31 in the same period. CASK excluding fuel improved by 8 paisa from 3.10 in Q3 fiscal 17 to 3.02 in third quarter fiscal 18. With this, we were able to partly offset the increase in the fuel cost. Wish to highlight that the calculation of CASK and CASK excluding fuel, unrealized gains and losses are not considered in the calculation. As Vinay alluded to earlier, our focus continues to reduce non-fuel costs, and we are on track to achieve the 12 to 15% reduction in non-fuel costs in coming 8 to 10 quarters. EBITDA for the quarter was 1,186 crores in third quarter fiscal 18 as compared to 1,300 crores in third quarter fiscal 17. EBITDA for the 9 months period ended December 17 was 3,200 crores compared to 3,860 crores for the same period last year. Now, in terms of an operational highlight for Jet Airways standalone basis for both domestic and international put together, we carried passengers of 6.12 million in third quarter fiscal 17 to 6.99 million in third quarter fiscal 18, an increase of 14%. During the quarter, our ASKs grew by 9.7% compared to last year, and gross revenue increased by 10.4% to 6,086 crores in the current quarter from 5,500 crores in the same quarter last year. Let me talk about the Jet Airways domestic operations, where our domestic revenues were to the total revenues were 44.8% in the quarter. ASKs during the quarter went up by 16.9%. Total domestic revenues were 2,729 crores, up by 14.5% as compared to Q3 of last year. The passenger revenue from domestic operations increased by 15.5% to 2,386 crores in the current quarter. And domestic load factors were at 85.4%, which reflects an increase of 4.7 points compared to quarter 3 of fiscal 17. Moving to international, the revenue accounts for 55.2% of total revenue. The ASKM grew by 6.1% compared to Q3 of last year, and passenger revenue from international operation increased by 9.3% to 2,853 crores in the current quarter. Overall seat factor in the international market stood at 83%, once again an increase of 3.7 points. Let me now take you through the details of the debt and the liquidity position for the Jet Group. As on 31st of December 2017, the gross debt on our balance sheet stood at 8,430 crores. Of this, the aircraft debt stands at 2,214 crores, and 71% of the total debt is denominated in US dollars. The net debt as on 31st December 2017 stood at 7,925 crores, a marginal increase of 40 crores over September 2017. This is primarily attributable to seasonal working capital fluctuations. As well, also in the quarter, there was a drawdown of close to 225 crores towards the BKC property which we acquired this year. Now, turning to the current quarter and the outlook as we see, yields continue to be under pressure and the Gulf market continues to remain weak. As mentioned in our previous call, we were to induct 8 aircraft during the current fiscal, of which 5 have been inducted by December 17 and remaining 3 have been has since been inducted into the fleet. In addition, the 737 MAX will start getting induction into our fleet from June this year. We will continue to remain a differentiated service provider, endeavoring to enhance our guests' in-flight experience, be it by providing state-of-the-art in-flight entertainment across our fleet or providing a more sumptuous meal. Let me now open the call to questions. Santosh.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use a handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Rahul Bangriya from Lucky Investments. Please go ahead.
Thank you for taking my question, sir. Sir, just one thing on the yield bit. As you've already mentioned that there is some pressure on the Gulf sector on the yield side. Your occupancies have done well both on the domestic side as well as the international side, whether we consider on the Y-on-Y scale, where domestic has done very, very well. But the yield side, if you could just give us a differential in the sense that what has happened on the yield in the domestic and what has happened on the yield in the international segment, please. Thank you.
I will ask Raj to...
Hi everyone, this is Raj Sivakumar. Thanks for the question. Like what was mentioned by Amit, we have done really well from the occupancy standpoint, both on the domestic and the international markets, and this is coming out of the fact that we have enhanced our network to promote more connectivity and fitting the demand better to fitting the supply better to the demand. Part of the yield pressure comes from the fact that we are taking a bit more of a load factor bias, as we look at our unit revenue situation, right? And what you will see here is, despite a healthy increase in the ASKMs that has been reported both in the domestic and the international sectors, we've been able to also report a unit revenue increase, in these operations. So quite simply, it is a question of adapting to the market better and ensuring that we are able to stay competitive. We are able to be relevant, wherever we need to be with all segments of the customers, and come out positive on the unit revenue side.
And just to mention to you, Rahul, that the company focuses on the RASK. It is always to define a perfect balance, and our focus has been, and thereby we have improved the RASK from a 4.22 to 4.28. I think that has been a fundamental focus, that the revenue management team takes an immense pressure and finds the right balance between what should be the yield level, what should be the load factor. They go out on a flight-to-flight basis to monitor this on a daily basis.
I thank you for the answer, sir. Actually, the question was more in terms of, while most other players do not have as big an international operation as you have, most of them have reported Q-on-Q and Y-on-Y good growth in yields, and which we have not seen here, of the order of 5, 7, maybe whatever, that kind of percentage we've not seen here, and that is why the question was there, in spite of the fact that we have been able to raise the yields and, all that thing about we having good real estate in Mumbai, so prime time occupancies are very good, and it was in that context, sir, that's all.
So, as I said, for us, the focus is the RASK. We work on the RASK, and you will always have in certain quarters, and comparative, it is a question of comparative, as we have a very consistent load of the corporate segment. We have been talking to you that we have increased our corporate segment from a 33 to 34% to 47-48% in the domestic, which is also closer to the departure, which gives more consistent revenue.
Great, so just one final question. If you could help us with what chunk of your international ASKMs are now on the Gulf route, and are the yields there still lower than what they were probably, say, 1.5 years back or something like that?
So, as we have talked to you, that close to 15%.
15%.
15% is the total, out of which of the total ASKs is in the Gulf market. And there has been a small improvement seen, but one would not say that it is a consistently we can talk about that we have this really strength coming back into the Gulf market. Raj, you want to add?
Yeah, I want to just to complement what Amit said. Yes, we are seeing a mild strengthening in some subset of the Gulf markets. Also, with the geopolitical issues going on, in Qatar, we have been, that has benefited us somewhat, with our operations to Doha, and we are leveraging that a little bit. But I wouldn't by any means say that there has been a turnaround that's been observed, in the Gulf.
So just to confirm, 15% of the international ASKM is on the Gulf route?
No, of the total.
Of the total is on the Gulf route? Oh,
yes.
Okay. Has that moved any bit up or down in the last 2 years, or that has been there and thereabouts?
Our focus has been to increase more and more into the domestic capacity. To that extent, when we continue to increase more and more into domestic, to that extent, few percentage points, it always comes up and down, and seasonally you keep on adjusting on month-to-month basis. That flexibility we always keep.
Great, sir. Thank you for answering my questions. Thank you.
Thank you. We have the next question from the line of Aditya Solanki from Dalal & Broacha. Please go ahead.
Hi, sir. Thank you so much for the opportunity. I really wanted to understand a basic question that our Q3FY18 profit was, PAT was 186 crores versus Q3FY17 PAT, which was 299 crores, out of which 327 was around a one-time item.
Yes, that is correct.
So it would have been a loss of 28 crores in the last listing if that item wouldn't have been there, correct?
No, because what happened, that quarter also carried an FX loss to the tune of, 1 second, I'll tell you. FX loss of 130 crores. 190 crores, I'm so sorry.
190.
Yeah, was an FX loss because of the currency movement.
Okay, so is it a right way to see that 186 crores versus roughly 150 crores in last year same quarter, like? Could be, maybe. It could be seen this way.
So basically, as I told you the numbers, now I would suggest that you look and do your maths.
Okay. And the second thing I wanted to ask is that as we say, we are trying to cut down the cost by 12 to 15%. So that would, could you give a rough ballpark figure? What could be the figure like? What could the figure come down to?
Okay, so we started this 12 to 15% journey. We took the baseline as 31st March 17 number, which was standing at 3 rupees 23 paisa.
Correct.
And from 3 rupees 23 paisa in second quarter, we came down to 3 rupees 7 paisa, and now we are at 3 rupees 2 paisa. So you can very well understand the target which we have given to the market is 12 to 15% is not something that we are achieving in the next quarter or the 2 quarters.
Correct.
As we have told that there are 4 or 5 big ticket items which is clearly identified in terms of one big maintenance cost reduction which we will witness from 1st of January 2019. So there are few such items which will come during the course of the next 8 to 10 quarters which will enable us to achieve our target of 12 to 15% non-fuel CASK. And based on our current estimates, we see we are clearly on track to achieve those. And that has been our focus, and that is clearly reflected in the various quarters as we have been consistently bringing down our non-fuel CASK, in spite of all inflationary wage increases and other FX movements.
Perfect, yes. Thank you so much. Thank you.
Appreciate it.
Thank you. Ladies and gentlemen, before we move to the next question, we would request you to limit your questions to 2 during the initial round. We have the next question from the line of Gaurav Nigam from Catamaran. Please go ahead.
First of all, thank you, sir, for taking my question. Sir, I have 2 questions on the cargo business of Jet Airways. First one is, how much is our cargo business? I have seen the numbers for FY17. Just wanted to understand, is that the number which is mentioned around, 1 second, sir. I could see on your annual reports around 1490 crores. Is that the only cargo revenue out of 22,000 crores of total revenue? Are we below or above the industry average? Just wanted to understand that point. And second one is from the net margins perspective, can you give me a broad understanding of how this 1490 crores flows down to the profit line? How much is the margin on that business, if I consider that as a standalone business for Jet?
Okay. First and foremost, I appreciate and thank you for giving me the opportunity, because cargo, we have a very strong focus on the cargo business. And to give you a perspective, compared to the last year, during the quarter, we have increased almost 30% increase in the tonnage and 40% for the first 9 months. So we have a very clear focus on improving the cargo revenue. But if you ask me that the cargo revenue can be considered and the cargo P&L can be considered, because we are running a passenger airline, it is an integral part, cargo is an integral part. So therefore it cannot be said, because if you say, take the leasing of the aircraft, lease cost, pilot cost, you have to pay, and that continues to be paid. So effectively, the cargo, efficiency on the cargo is a significant focus for us, as it improves the top line as the bottom line as well.
And sir, I asked two questions on that. Are we below or above the industry standard? And can you broadly give me the margin, if not the exact numbers?
No, we are not in this that we will be able to give you specific margins for the business, because I consider as an integral part, because depending upon the load factor, the availability of the since I can put how much weight and so on. So it is a fine balance which is being struck between a passenger and a cargo.
And sorry if I can just add, and this is a reasonable international standard, as you can imagine. The cargo cost comes at a very low marginal rate. So if you tell me what's the way to allocate aircraft ownership between the belly and the top, we can then start answering questions related to margins. But most airlines around the world choose not to do that unless they have dedicated freighters. So we're not trying to evade the question for you. I think the best way to look at cargo for a passenger airline like ourselves that does not have freighters is to look at overall cargo revenue.
Okay. Fair enough, sir.
Thank you. How are we doing relative to the market? Our view is that whatever information that we have that is publicly available from an Indian airline perspective, I think we are one of the leaders in the market.
Sure, sir. Thank you.
Thank you. We have the next question from the line of Anshuman Dev from ICICI Securities. Please go ahead.
Hey, thanks for the opportunity, sir. I had two questions. One on the revenue side. So basically, if I do on the standalone numbers, if I do a domestic revenue per passenger and international revenue per passenger, then the domestic revenue per passenger has declined by around 4%, which is against the run which we have seen, and international revenue per passenger has actually increased by 2.5%. So I know you said that RASK is your focus, but if you could throw a little bit more color on the apparent reversing of the trend in this quarter. That's my first question.
Okay, so let me answer the question. This is Raj again. It has to be, the revenue per passenger metric has to be viewed in conjunction with our capacity growth, right? And when you look at the year-over-year numbers, the domestic ASKMs have increased by more than 13%, right? And on top of that, what we have been doing is, like I mentioned before, in order for us to achieve a unit revenue positive result in an overall declining yield environment, we have been taking a bit more of a load factor bias, and our ability to be competitive and relevant to all the customer segments, like I mentioned before, has resulted in a unit revenue increase despite the 13% increase in the capacity. Okay, so revenue per passenger individually, while it is a good metric to look at, we firmly believe the only metric really that matters is how productive our capacity is, and we are quite pleased at where we are stacking up, on the unit revenue metric or the RASK metric, despite the capacity increase of 13%.
Right. So if I understand correctly, that obviously you are focusing on RASK, so there would be a load factor bias, and some amount of gestation period might be for the new capacity, and over there may be some improvement which can happen over there. Is that understanding right?
Yeah, so our continued focus will be, and like it should be, it's going to be on RASK. Where the yield is going to stack up, or the fare per passenger, revenue per passenger, however you want to look at, it depends on the market forces, right? So it is our responsibility, given whatever the market gives us, is to maximize the revenue and the RASK, on our flights. So, if it is a yield bias, our revenue management system and analysts will take a yield bias. If it is a load factor bias, our systems and the people will take a load factor bias. So it's quite simply the answer is that.
Right. Thanks a lot for the detailed answer. My second question was related to the cost. So I just wanted to understand that the unrealized loss or gains which are not included in our CASK or CASK ex-fuel calculation, these are all in other expenses, right? In the sense that, I do my calculation, so that number will be significantly different, and it gives me around 6% decline in YOY cost per ASK, including depreciation and interest. So these unrealized losses or gains are there in other expenses?
Ravi?
That is right.
Okay, and continuing with that is like when we say that 12 to 15% of our reduction of CASK ex-fuel is on track, so we are on a like-to-like basis, it would be around 2,500 to 3,000 crore of cost reduction if this program would not have happened. Is that mathematics right?
Yeah, the basis of calculation, as you explained, that is for the computation of CASK, it does exclude these unrealized fluctuations, both the gains or the losses. And considering these, the 12 to 15% that we have said is going to be on the similar lines.
Right. Thanks so much. Thank you.
Thank you.
That's clear.
Thank you. We have the next question from the line of Achal Kumar from HSBC. Please go ahead.
Hi. Thanks for the opportunity. I have two questions. Firstly, on the RASK. So RASK is up 1.4%. Can you please give us some bit of more color on how to make it up, so 1.5%. I believe it includes, so last year there was some demonetization effect, some international effect. So how do we see the sort of color in terms of how do we look forward for the domestic and international RASK? That is first question. Secondly, I wanted to understand that when you say the CASK and CASK excluding fuel, does it include the forex gains and losses? So this year you have announced a forex gain of 142 crores, and last year it was 190 crore of loss, and then this year you have insurance claim of 11 crores. So does that include all that? And if that is the case, then what would be the sort of excluding these numbers? What would be how your CASK and CASK ex fuel would look like? Thank you.
Shiv, Raj, you can answer the revenue number and then CASK as well.
Okay, so if the question was about what our RASK strategy is for the upcoming period, upcoming quarter in particular, like I've been maintaining, the yields continue to be under pressure. So let me talk about the domestic market first, okay, and then I'll get to the international market. On the domestic market, we are going to be faced with two items. One, of course, the yield continues to be under pressure, and we are also faced with a seasonally weak quarter. Okay, so any RASK outlook or the performance has to be taken in conjunction with these two forces. Given that we are going to our strategy is essentially to ensure that we stay competitive. And, if we have to take a load factor bias to capitalize on the growing Indian market and make sure that we are being very selective, in applying the right yield points wherever we can in growing our overall risk. Now, insofar as the international market goes, as you all know, our international operations is defined by multiple entities. Okay, so we have the Amsterdam, Paris, European operations. We have UK operations, Gulf, and the ASEAN and the SAARC operations, of course, as you all know. And it is a very targeted approach, quite honestly. Like I said before, and like our CFO said, the Gulf market remains depressed with some mild positive that we're starting to see, and we got to see if it stabilizes or strengthens, over the coming quarter. Insofar as the US operations, the European operations go, we are very pleased with how the partnership with Air France KLM is evolving, and we are starting to see better quality of passengers as well as the network effects, kicking in, in the European operations. The UK operations is witnessing the stabilization of the new Mumbai-London flight, that we added. And, our Asian markets, are fairly stable. I'm not seeing a big movement either way. And our SAARC operations are primarily feeder markets, for the Gulf and the European sectors. So overall, I see, a stable RASK, year over year, and, I'm talking about international here, okay? And insofar as domestic goes, we will, like I said, we will stay competitive in the market. But quite honestly, it's going to be a function of, how the carriers behave in this historically, weak quarter, in the domestic market.
Yeah, and on the CASK, as we mentioned very clearly, the FX gains and losses have not been calculated or considered for CASK calculation. Both, it is not relevant because these are the movements of mark-to-market, non-cash. That is why it has not been considered. That is why it has not been considered in the CASK excluding fuel or CASK calculation.
But they are part of the net profit, right?
Yeah, absolutely. Yeah, because it is an accounting.
Okay, fair enough. Thank you.
Thank you. We have the next question from the line of Mayur Milak from the Indian Airways Securities. Please go ahead.
Yeah, hi, Amit. I'm looking for a couple of, I don't know, probably funny answers. So one thing that I just saw was the restating that happened. So the first 9 months that we restated for last year, our PAT has effectively gone up from 353 crore to 825 crore. So we've seen an increase of about 470 crores in last year 9 months performance, purely based on restatement.
That is correct. So Ravi, why don't you walk in?
Okay, that's right. Mayur, in fact, we have provided a small reconciliation, as you rightly mentioned. Originally reported the Indian GAAP numbers were at 354 crores, which as per Ind AS, as restated, is going up to 880 crores. You would see therein the primary reasons for this kind of an increase is due to the change in the way the exchange fluctuations are accounted for, and added to that also the arising out of these exchange fluctuations, the adjustments that has been done to the carrying value of the asset, the profit on the sale of asset which increases because of the carrying value adjustments because of the foreign currency fluctuations. These are the two primary changes or the adjustments which has led to the increase. So the profit on sale and leaseback of the aircraft that we did in the last 9 months last year, which led to a positive impact of almost 385 crores, coupled with the depreciation impact of having charged off the exchange fluctuations on the asset, which gave further reprieve of around 170 crores. So these are the two major changes, impact, which really led to this kind of an increase.
Yes, so I see 170 crore on depreciation. I see the other expenses coming off by about 100 crore, which I'm sure is the forex part. And I see another 145 crore sitting in the other income, which is again the forex part.
Other income?
Yes, so your other income reported has gone up by 145 crore. See, I'm talking all about these we were talking about last 9 months of last year, all right? Just the restatement part.
That's right.
So I'll tell you why I'm doing this, because, as far as the numbers go, I thought that we had a great performance this year, this quarter. But then when you look at the restated number, it starts looking at you made about, against 300 crore, we made loss for this year. A negative number, No, whereas originally my thought was that we had a good quarter. So I'm still confused as to, why such a massive restatement has happened. And that actually distorts the entire picture in favor of, where I have to see that the likes of SpiceJet and Indigo have made year-on-year growth. For Jet, it looks like we are on a year-on-year decline, simply because we restated our numbers in a very big number, on those lines.
So, Mayur, let me explain to you. We continue to have done good during this quarter. The adjustment that has arisen, as in fact you rightly mentioned, is on the profit on sale and leaseback line item, which was the biggest item sitting there in the last year's restated figures. So the 385 crores is primarily the value of the profit going up due to the adjustment of the carrying value of asset, given the fact that as per Ind AS, any exchange fluctuations which were sitting in the carrying value of asset had to be charged off to the P&L. So it reduced the carrying value of asset, and when compared to the selling prices of these assets, the profit realized on these assets have gone up. And that has really contributed to the big swing, moving from 354 to 880 crores.
Right. So this is really not a cash inflow, right? This is more of a book adjustment entry. So this profit actually goes and hits your accumulated losses as such?
That is right. This is only the major accounting entry arising out of following the Ind AS regulations.
All right. And
Mr. Miller, I'm sorry to interrupt, but we have participants in queue.
All right, so I'll probably come back in line.
Sure, thank you.
Sure. Thanks, Mayur.
We have the next question from the line of Pradeep Melchers from HSBC. Please go ahead.
Hi, thank you for taking this call. I just had one quick question. A couple of quarters back, you had indicated that the 7 billion NCD that you had as part of the partner transaction, you were looking at probably prepaying that in this year. Do we still stick to that plan, or has that plan changed?
Pradeep, can you repeat your question? I could not follow because the line was a little bit weak.
Yeah, my question was with respect to what you had indicated a couple of quarters back regarding your NCD, the 7 billion NCD, and my understanding was that you were planning to kind of prepay it by the end of this year. Are we still sticking to that plan?
Yeah. Okay. So now I understand your question. Thank you. It's a NCD of $100 million, which based on the current indenture agreement, the first repayment potential date is December 2018. So as of now, the plan still continues to be that we would make that payment.
All right. That will be it from my end. Thank you so much.
Thank you.
Thank you. We have the next question from the line of Joseph George from IIFL. Please go ahead.
Thank you. So my question was in relation to the income that you were booking on some jet privilege transaction. So if I remember correctly, in the first half of FY18, you had booked revenues of some 165 crores. I just want to understand whether there's anything in this quarter's P&L.
Yeah, we had, Joseph, thanks for your question. We had 140 crores left to be accrued over the balance period. In this quarter, we have accrued 69 crores out of that, leaving a balance of 71, which is likely to be exhausted by the end of the current quarter, that is the last quarter of the fiscal.
All right, and this 69 is sitting in which line item, if you can let us know?
This is on the other income.
All right, okay. The second question that I had was in relation to the owned aircraft. So the total aircraft count that is given is 117, of which one, of course, is leased out. But of the 117, how many are owned by you and how many are on operating lease?
16 are owned by us and the balance is on operating lease.
All right. And the last question I had was in relation to the difference that I'm seeing in the yield, YOY yield movement in the standalone domestic operations and Jetlight. So when I look at the Jetlight operations, the yield seems to have moved higher on a year-on-year basis, whereas when I look at the standalone domestic operations, it's moved down. So just wanted to understand whether there are any peculiarities. I know Jetlight is a small operation, but whether there are any peculiarities because of which one has gone up and the other has gone down.
No, it is difficult, but as you know very well, the aircraft between Jet or Jetlight is considered on a uniform, so as a group network. So it can always happen that some of the aircraft of Jetlight has flown on a certain network which was not flying in the previous period, because based on the efficiency, we have been always focused on aircraft utilization, and we have shown an increase also in this quarter. So in order to optimize the whole resource, which is the fleet, we keep on shuttling between the aircraft which we fly from one sector to another sector, and at that point of time the network planning does not really look at it, whether it is a Jetlight aircraft or a Jet Airways aircraft. So this is because of overall network, and we consider the business both put together as Jet Group.
All right, okay. Thank you.
Thank you. We have the next question from the line of Pavan Kumar from CRISIL. Please go ahead.
Hello, sir. Good afternoon. This is Pavan Kumar. My question is regarding the UDF. If we considering that the UDF is one thing that we passed on to the passenger through your P&L of the airline, which comes under other expenses, what is the impact of the Delhi airport tariff reduction on your P&L, sir?
Okay. Pavan, basically the PSF, ADF and UDF are generally the pass-throughs that is sitting on the ticket. So these are purely the levies which are included in the pricing of the ticket, but they are completely passed on to the individual airport operators in total. So from a P&L perspective, this would not enter the airline's P&L, and this is completely a pass-through which is collected from the passengers and passed on to the airport operators.
Okay. Sir, and also one more thing I wanted to understand, from your total expenses, what percentage of expenses will be going towards ground handling, of typically, we have what is RAM service and everything. So do you have a typical share of what percentage of total expenses go into that?
Okay. We have not been defining it separately into this, and so we have a very careful watch on the ground handling charges and continue to negotiate the various contracts very effectively. However, we do not go out, considering the nature and the complexity of the business, any specific number, but it is not a significant number in any case.
Okay, so your complete ground handling charges will go into other expenses only, right?
Yes, please.
Yes.
Okay. That's it, sir. That's it from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we will take the last question now from the line of Anshuman Dev from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity again, sir. I had a question regarding your working capital management. So we are, can we expect, or what is the company's strategy regarding working capital? Because in airlines we have seen other companies managing a negative working capital cycle. So can we, are we doing something, or what's our policy to make working capital net cash positive?
Yeah, so it is a fact that in this business it is a negative working capital, and we have the similar philosophy. So there is no such change.
Okay, sir. Okay, sir. Thanks so much. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question, and we will now close the question queue. I would like to hand the floor back to the management for closing comments. Please go ahead.
Thank you, operator. We would like to thank all investors, analysts, and participants on the call for taking interest in the performance of the company. And once again, thank you SBI Cap for hosting the call.